Hey everybody, Larry Berman here. Wow, one hell of a week. Supposed to have my back surgery this week, and literally getting into my car on Tuesday to drive have my wife drive me down to the hospital, get a call from the doctor. We're backed up. We're having staffing issues. Won't be able to get your surgery done today. Gonna have to postpone it. So I don't know when that's going to be yet, but I hope it's soon. I'm increasingly have to sitting flat, sitting upright like that is actually a literal pain in the butt. So crazy week. Let's dive right into the charts. So Thursday was the big event of the week, CPI data. Literally, although a lot of things happened this week, but literally was a little bit better than expected. Well, a lot better, I guess. When you dig down deep, there was no one on the street of 50 odd forecasts that was as low as it actually came in. There was a Wall Street Journal article out 2 weeks ago talking about this anomaly in how they track healthcare pricing, and so that obviously was a huge impact when you saw the actual results. So, markets ripped higher. Thursday was the best day in years. You have 5% rally days in markets during bear markets only, not during bull markets. They come from off oversold conditions. So not too surprising, but as we dig into the chart room this week. Obviously, U.S. election was very, very big this week. The impact of that, let's have a look. So, there was supposed to be this big red wave, and while the GOP is likely going to win the House, it was by a far, far tighter margin than the most optimistic estimations. And it was just, or it may just be, a couple of seats. So right now, here we sit late Friday, they've called 194 seats for the Democrats and 211 for the Republicans. The Senate, as we all know, Georgia's going to go into a runoff, and we're not going to know until December 6th, who controls the Senate. And we've said that doesn't matter as much, obviously, as the House, but the House was going to go GOP. So when we look at the current mix and when we drill down here, so looking at all the different states and all the seats where they're leading and elected, you can see these light pink ones here. That's where they're close, but the Republicans are ahead, and the light blue ones are close, but the Democrats are ahead. And so when we look at these toss-ups, we need 218, or 218 is needed to control the House. If you look at leading and elected, this one's toss-up 50-50, very close, 58% of the vote in. So lots to go here in these three in California. But leading that way, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 that would give a 221. So it is that close. Now, if these close ones swing the other way, we don't expect them to. 97% of the vote, that's a big enough margin, probably goes that way. These are close, but not that close. A lot of votes to count. But these guys are screening it in that direction. So when you think about it, the Senate is probably going to go Democrat, if that was my guess, with the tie-breaking vote going to the vice president, and the House by the tiniest of margins. So what does that mean? That means you're not going to get any big, bold initiatives, not that you were out of the House anyways, but the more neutral, more negotiation. And so gridlock, but maybe some stuff gets done. So that's kind of what it means. Is it going to matter much? I don't know. But the less government spends, the less stress on the bond market in general and yields, and that's probably a net positive for capital markets in general. So let's have a look at the debacle that is Bitcoin and cryptos. This red line here is the week that Elon Musk added Bitcoin to Tesla's treasury, $1.5 billion, something like that. This white line here is when the leader of El Salvador declared Bitcoin a legal tender. This week, another major Bitcoin exchange has liquidity problems and had to file for bankruptcy. What is Bitcoin worth? What are cryptos worth? They're worth what the next person is going to pay for them. Is there contagion risk here? There is a little bit for sure. Probably back towards these levels here, 10,000-ish before we see any material rallies here. I would think every rally is going to be sold for the foreseeable future. Again, glad to take up the debate, but that's kind of my view on cryptos. I do get asked for that view a lot. Again, I don't see any contagion risk in a big way here because the total dollars, while meaningful, are still small compared to, the size of the national debt and other things that are far more important. Big levels. So here we are, late Friday, couple minutes before the close here. We are testing important resistance retracement levels around 4,000. Possibility we get up to that falling 200-day average. We talked about it in recent weeks, projecting it out into December around the 4,000 level. Maybe we test it, maybe we don't. Non-technical colleague of mine, fist-pounding sell here at the 4,000 level from a fundamental valuation perspective. So we'll see what happens. Obviously, a lot of position squaring to do. That CPI number surprised a lot of people. Big movements on the currency fronts. You had, big swings. The whole world is tilted bullish US dollars. That takes weeks, if not months, to work through and unwind if people are going to change those positions. Folks, if we're going into a bear market and we're going into a recession in the US, don't look for a strong euro, i.e. weak dollar. Yes, it's going to matter if the Fed does actually pause rates, but we probably don't get any indication of that in December, although the slower pace will be communicated. I'm looking for 50, 25, 25. And depending on what inflation does as we get through and what the economy and what jobs do as we get through 2020 into 2023, that will largely dictate the further pace of Fed tightening. Powell only a few weeks ago said higher for longer. I still think we have to take him at his word for that, unless the labor side of the story cools off dramatically, and there's no evidence of that yet. Although we are hearing, more and more big corporations layoffs. We're not hearing it, from the NFIB and the smaller businesses. They're still net finding it difficult to hire, skilled labor. So a lot to go here. Looks like the market's a sell here on strength, and you want to fade this yet another bear market rally. But we finally did get that downtick in inflation that the market was hoping to see, some position squaring. So we have the equal weight S&P. It's a barometer for the average stock in the US. And once again, we're pushing up over that 200-day average. We saw this for a couple of days during the August rally, and the market failed. I would expect the same to happen here. Calling this a breakout into an overbought condition, it is not yet time to trade that way. Maybe, just maybe, we're stronger buyers on dips going forward, but that's going to be dependent on earnings and how the recession plays out next year. And far too early to price a bullish Fed cutting stimulus environment into the equity market at this point. So we're calling this position squaring. Looking at the most oversold part of the market, the Qs, and where the strength is coming from, it's pretty clear that the NASDAQ is leading the bounce here. Can we see a test of the 200 for the NASDAQ? We can. That would be the catalyst to lift us towards that 200-day average for the S&P overall. Remember here, the S&P went through it slightly, the equal weight S&P, the broad S&P tested it, the NASDAQ fell short. What's going to happen in the next couple of days, we'll see there. But right now, short covering, position squaring is where it is at. Let's have a look at the bull and bear picks of the week. So while I'm not bullish per se, what I'm suggesting here is defensive. And for the coupon clippers out there, I'm going to go back to one of my old reliables. We've had a material correction in the utilities. That was a large part of what this was. We had a pullback in the energy names, in particular the pipelines, a large part of what this was. We've obviously bounced with the market here. And for the defensive coupon clippers out there, ZWU is still a very, very interesting way to extract yield from the market with a lot less risk at this point, given it's come off so much in the recent months. And overall, where are you bearish? Folks, I think you're bearish in general on the market here, and you got to fade the rally once again. Have a good week, everyone.